Gaze! Gaze! Gaze!
Oh, hey, you're back. Wait, what happened, Mahira? Why do you look so panicky?
Do you have any idea how many times I rang the doorbell?
I hope it's a single-digit number.
It's not.
Oh no, I'm so sorry. It's just that I fell asleep on the couch with my earphones on. Sorry about that.
Get in?
I'm sorry, Habibi. Calm down, no? Next time you don't open for an hour, and I will wait outside, okay?
It's not about that, Gaze.
Then?
For a second, I thought something bad had happened. I was so scared.
Oh, I didn't know you loved me so much.
Of course I do. But I wasn't just scared about myself. What will happen to our kids' future if something goes wrong with you? What will happen to their education, their healthcare, their finances if you're not around, Gaze? Have you ever thought about it?
I have, and in fact, before I took a break and started listening to music, I was solving this problem only.
Huh? How?
With the help of a term life insurance policy, Mahira. Let's check out Policybazaar.ae that offers a wide range of term life plans on the website. So let's go ahead and see which one is the best for us.
Wow, Gaze. I am mightily impressed. It's almost like I'm coming home to a much more self-aware person.
Self-aware, I don't know, but insurance-aware for sure.
You are listening to Policybazaar.ae's The Policy Project. We've got you covered.
Hello, ladies and gentlemen. Welcome to a brand new episode of The Policy Project. I'm Sid, your host of this podcast and your go-to person for all things finance and insurance. How are you guys doing? Well, hope you're as relieved as Myra is upon finding out that Kayes is all set to start his term life insurance journey, which is also what we are going to be talking about today. Term life insurance. And to shed more light on this topic, like always, we have with us today not one, but two experts who are here to share their in-depth insights on this topic. Please welcome our in-house insurance expert, Joseph Terence. He's the business head of life insurance at Policybazaar UAE. Hey, Joseph, welcome.
Hi, Sid. Good to see you.
And extending a warm welcome to our second esteemed guest, Kareem Al-Mala. He's the head of production at Metlife Gulf. Kareem, welcome to the Policy Project.
Thank you. Thank you so much, Sid. Thank you so much, Joseph. Pleasure being here with you, gentlemen.
Fantastic. All right, guys, are we ready to dive right in?
Yes, sir.
Perfect. Let's do it.
So, the person who said yes, sir, first, Kareem, we start off with you. Okay? So, let's ask you one of the most difficult questions and one of the most asked questions. Can you explain what term insurance is and how it differs from other types of life insurances?
Sure thing, Sid. You are shooting the hard questions to begin with, but I think these are the foundations. Term insurance is a type of life insurance that provides coverage for a specific period or term, usually ranging between 5 to 30 years. If the insured person passes away during the term, and the policy is active or in force or valid, whatever terminology you would like to use, the policy pays out what is called a death benefit to the beneficiaries. A term life insurance policy is the simplest, purest form of life insurance. You pay a premium over a period of time, and if you pass away during that time, a cash benefit is paid to your family or whomever you chose as your beneficiary. Now, unlike other types of life insurance, such as whole of life or universal life, term insurance does not accumulate cash over time and is typically more affordable.
Understood. Okay. So, Kareem, taking a little bit more of your time, how can individuals assess their life insurance coverage needs and why is this important?
That's a really good question, Sid. Individuals can assess their life insurance coverage needs by considering several factors. And bear with me here, it's a little important to understand some of these details. First of all, you need to consider the financial obligations and income replacement. You need to determine your current and future financial obligations, such as mortgage payments, outstanding debts, and education expenses for your children. Calculate the amount of income your family would need to maintain their standards of living if you were to pass away prematurely. Consider the financial needs of your dependents, including their living expenses, education costs, and any special needs they may have. You must also consider future expenses such as retirement savings, healthcare costs, and even inflation when calculating your life insurance needs. You must evaluate your debts and assets to determine the amount of coverage needed to protect your loved ones from financial hardship in the event of you passing away. Other things to also consider is your age, health status, and life expectancy when selecting the duration of the coverage. You see, younger individuals may choose longer terms to cover more years of potential income loss, while older individuals may choose shorter terms if their financial obligations are decreasing. Consider your life stage, such as being single, married, or having children, will influence the amount of coverage you need. For example, a single individual may require less coverage compared to a married individual with children. Consider your budget, and this is very important, and affordability when choosing the amount and the duration of coverage. While it's important to have adequate coverage, it should be financially feasible for you to maintain the policy premium payments. And by considering these factors, individuals can estimate their life insurance coverage needs and choose a policy that provides the adequate protection for their loved ones. It's also a good idea to review your coverage periodically to ensure it remains aligned with your financial situation and goals. Now, all these things that I have just mentioned are maybe not such an easy exercise to do and to consume. So, consulting with an insurance advisor can also provide valuable guidance in this process.
Brilliant. I liked how you stressed upon the point of reviewing it every couple of months, every couple of weeks, every couple of years. So just so that everybody knows where exactly do they stand.
Absolutely.
All right. So on that note, Joseph, I want to ask you that while on one side people often say more the merrier, wisdom often suggests that excess of everything is bad. So when it comes to term life insurance, though, do you think the concept of overpurchase exists, and is it bad for the customer? And if so, how can one avoid it?
Sid, to answer your question, generally people do not want to cover themselves adequately. That is a problem that the insurance industry faces.
Right?
Now, the second condition is whether do they do excess buying, basically. That is actually risky for the person itself, right?
Okay.
Now, in a normal scenario, overpurchase doesn't happen because if
Okay.
you're declaring your income and your net worth, the underwriters will know how much coverage you can get. It
Okay.
will not be a scenario where the underwriters allows you more than what is actually required to you. Now, the reason why the underwriters do not allow is basically we go by a simple principle that you surviving should be more beneficial to your family than you dying,
Correct.
right? So if you have insurance which is like much beyond what is required, there are all the chances that something can happen to you.
Correct.
I do not want to put it in a different word, but all the chances, you have so many incidences around the world which you can read through where
Right.
you get killed or things happen just for the sake of insurance benefits. So it is always advisable to declare your income and your net worth so that you're not overinsured. I mean, if you don't declare, if you say you do not have a policy which is already active and you want to take double, you end up paying more. One, second, all the chances that something may happen to you.
True that.
Somebody might be more interested in money than your life. So that's one thing to avoid.
Interesting. Very interesting. So, Kareem, coming back to you, who, in your opinion, should buy term life insurance out here in the UAE?
Okay, term life insurance is typically suitable for individuals who have financial obligations or those who need coverage for a specific period. So let me give you some scenarios of where term life insurance may be a good fit. Young adults who are just starting their careers may have limited financial obligations, such as student loans or rent, but they can benefit from the affordability of term life insurance at a younger age to cater for future financial obligations. Parents with young children often have significant financial responsibilities, such as mortgage payments, childcare expenses. So, term life insurance can provide coverage during the years when children are dependent on their parents' income. Homeowners with outstanding mortgages can choose term life insurance to ensure their family can make the mortgage payment and stay in their home in the event of them passing away. Individuals with significant debts, such as student loans, credit card debt, may also opt for a term insurance coverage to cover these obligations and prevent their loved ones from inheriting this debt. Another set of individuals that term life could be of interest to them are business owners or key persons who may use term life insurance to protect their business interest, such as covering business loans or providing funds for buy sell agreements, or maintain liquidity if a key person in the company passes away, which would impact the earnings of that company. Individuals with temporary financial needs, such as funding a child's education or paying off a loan, can purchase term life insurance to provide coverage during the specific period when the financial obligations exist. You see, overall, term life insurance is a flexible, cost effective option for individuals who need coverage for a defined period of time and want to ensure the financial protection for their loved ones during that time.
That's pretty interesting. So, are there any do's and don'ts while purchasing term life insurance? Joseph, can you answer that? And if there are any factors to consider while comparing a term life plan, so to speak?
So, don'ts are less, but do's are more. So, let me start with what are the do's. So, first thing you need is, as Kareem said in the previous point, okay, once you start your career or, have a particular incident, or say incident, I mean, probably you get married, you have a kid, you take a loan, you need to buy an insurance. So, first thing you need to know is, as a do, is why actually you need insurance, right?
Okay.
Why do you need, what is the purpose that you're buying a term insurance from? That is one. To second is, what are the benefits available in your policy? Like if you buy a term insurance from a particular company, what are the benefits available? Benefits or riders, you might call it. And
Right.
when does it start? When does it expire? So that is second thing that you need to know. Third, what is the amount of coverage you need to have? Right? You can be underinsured, you can be overinsured. You need to know what is the coverage that you need to.
Right.
And the fourth thing is, you also need to know, read through the terms and conditions. What does it cover? What does it exclude? If you have a pre-existing condition, does it include? Does it exclude? Do you need to declare it? So that is kind of, you need to know that. You should declare any health conditions or financial liabilities or anything that you have. You should declare it in the application. Most of the time, what happens is the insurance agent who comes and sells your policy makes you sign blank application and says, okay, sir, I've taken your date of birth, I've taken your name, address, and all those things. I'll fill up the rest.
Right.
Please do not allow that. You should fill up the application, or you should at least know what are the answers given. Right. And once you have taken the policy, inform, or while in the process of buying a policy, please inform your family members also that you're buying a policy, at least your spouse or your parents, that you have taken a policy, and keep them in loop. You're paying the premium and it is an active policy. Keep a copy handy in some safe drive, which is shared drive with them, or at least let them know which company you have taken the policy from and what is the coverage. On the don't section, I would say, do not just go buy randomly. Compare different policies, see what is best suited to you, and buy policies like that. And what else? I think that's the don'ts that comes into my mind.
Okay. Fair enough. So, Kareem, this brings us to our next question. Are there any implications of letting term life insurance policy expire? And what options does the policyholder have for extending, or, if they want to renew the coverage? Are there any?
For sure, there are implications of letting a term life insurance policy expire without renewing or extending coverage. And it could be significant implications, as it means you're losing the financial protection provided by the policy. So, some of these implications and options for policyholders are: the biggest and most obvious implication is that you lose your coverage. Once the term expires or the policy lapses, the policy no longer provides you that death benefit to the beneficiaries. if the insured should pass away. This could leave dependents financially vulnerable and unable to meet ongoing expenses or obligations. Also, you may find yourself needing new coverage. So, if the individual still requires life insurance coverage, they will need to apply for a new policy. However, securing coverage may be now more challenging and more expensive, especially if the insured's health has deteriorated since the initial policy was purchased. Age and health considerations are also very important. Reinstating or purchasing a new policy at an older age or with health complications can result in higher premiums or even difficulty obtaining the coverage. It's generally more cost effective to purchase life insurance at a younger age when premiums are lower. Some term life insurance policies may offer a renewal option, so therefore allowing the policyholder to extend coverage for an additional term. However, premiums for renewal may increase significantly compared to the initial term. It is important to evaluate your needs before letting a term life insurance policy expire. You should assess your current financial situation and insurance needs and even have a glimpse into the future. If they still have dependents or financial obligations to protect, it would be wise to explore for options for extending or renewing the coverage. Overall, it's essential for policyholders to carefully consider implications of letting a term policy insurance expire and explore all the available options for maintaining adequate life insurance coverage to protect their loved ones. Consulting with an insurance advisor can also provide valuable guidance in this process.
Right. So, Joseph, for you now, if you could let our listeners know about the different types of term life plans like convertible term life, increasing term life, decreasing term life, return of premium term life insurance, the different ones that are there. If you could just shed some light on that.
Sure, Sid. So the first and the basic policy that everybody buys or which is available in the market is a level term policy that we call, it's the first kind of policy that I'll explain about. So level
Okay.
term policy is where your coverage and your premiums remains same throughout the period of cover. So if you're taking a 30-year level term policy, it says you're paying 1,000 dirham premium. So it is 30,000 dirhams throughout the 30 years, and your coverage, if it is for 1 million, it remains 1 million throughout the period. That is the first
Understood.
thing. Second would be your decreasing term policy, which it is actually not decreasing term in a sense like the time period, but it is basically a sum covered actually reduces. But your premiums usually remain flat. So it is usually taken against a mortgage or something that you have taken, which means like you have taken a 25-year-old mortgage here in UAE, you buy a 25-year-old decreasing term policy, your premiums are lesser than a level term, but the coverage actually decreases as the year passes. So you might start with a 2 million, but at the 25th year, your coverage probably would be about 100,000 dirhams. So the cover decreases. Now, this third option that is available actually is the increasing term life. Now, it is actually said that you probably need to. Somebody who doesn't want to buy policy every year or every month, he says, okay, the inflation is going at 7% or 10%. Let me buy a policy where the sum cover actually increases 5% or 7% every year on the annual stream, right? So your premiums are calculated based on the increase. It's actually leveled again, and your sum cover increases gradually, but your premiums are actually level. Now, the difference between the first three that I've spoken, your level term premium and your decreasing term, when you compare between the two, your decreasing term premium will be lesser than your level term premium. When you look at the increasing term, your increasing term life premium would be higher than the level term premium.
Right.
Another one is the return of premium policy. Now, return of premium says once you have completed the term, either a portion of the premium or probably the whole premium that you have paid is returned back to you if you have not made a claim, if there is no claim on the policy.
Okay.
Now, that is probably 3x. The premiums are actually probably about 3x of the level term policy that you buy, 2 to 3x minimum. So it's almost double that you pay, but at the end of the premium payment term or when your policy expires or matures, you get the premium back It can be 100%, it can be 50%, depending on what kind of policy you've taken.
Interesting.
A convertible term life policy is where you actually buy a term life policy, you have a cover. Now, tomorrow you want to move this policy into a different product, say a whole of life product. You do not have to go through the underwriting process. Or probably if there's a cash value accumulated on a return of premium policy, that is actually used or funded to a different policy. Convertible term life policy is not so much used in UAE, or not available, I should say, in UAE. So the major kind of policies, term life policies available here is, one is the increasing term, decreasing term, level term, return of premium, and one is basically annually renewal policy. Now, annually renewal policy is also for a period, like you can buy annually renewal policy for 30 years. But here, your premium changes every month. Your coverage remains the same, but your premium changes every year. So basically, today you might pay 1,000 dirhams, next year you might pay 1,200. So depending on age, the premium also increases. The only advantage here is that the company which is giving you a annually renewal policy, it's only guaranteeing the renewal options. Right? You will definitely be renewed. Your policy will be renewed, but your premiums will increase. I think that's majorly what's sold here in UAE.
Okay, I see. We'll continue talking about term life insurance and a whole lot more. Stay tuned to the Policy Project for part 2 of this episode next week.
You were listening to Policybazaar.ae's The Policy Project. We've got you covered.